Technology is in many ways about removing friction from the system. Like that's what technology is really good for, right? And that can mean, creating transparency. It can mean that you move away from this notion of integration to just, an API call. And when you remove the friction sufficiently, it can actually be game changing. It can be structural, right, rather than transactional. In what it does, it opens up. It opens up. I like to say a lot more market forces actually into an industry. I'm Caribou Honig, and this is the future of insurance.
This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that drive powerful business actions and outcomes. Leading insurers like Prudential and Zurich use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at Medallia.com.
Thank you for joining me for the first episode of this new show. I'm very excited to have you on, and thank you for being willing to be the guinea pig.
Thanks, Bryan. It's my privilege to be here.
Yeah, no pressure. You're anchoring the entire thing. So
I set the tone. That's, I've done that once or twice elsewhere. I feel okay.
I think you have a nice track record of starting something that ends up being hugely successful. So hopefully we get similar kind of download numbers to attendance at ITC. That's my goal.
I'll do what I can.
You joining. Yeah. So we had a little bit of a conversation before, and full disclosure, I lost the recording. So here we are trying a second time, which means I've got some cheating on my end around some of the things that you might be talking about. But it's very interesting as we sit here 5 years after the first ITC, if I'm doing the math correctly. I'd love to hear a little bit about that kind of genesis story and that early feeling, as you were getting it together and when you had the realization that this was a real thing. And maybe you can almost call it a movement in the industry. I would call it that. You may not. You may be more humble about it. But some of the things that you were thinking back then and how things have played out, a lot of change in the industry and a lot of change still to come. So I'd love to hear kind of those early days and the thoughts that were on your mind then, and then we'll pivot to looking ahead.
Yeah, my pleasure. So, I have to admit, I never get tired of telling the story about how ITC came into being. I was a partner at a VC firm that I'd co-founded, QED Investors. And around 2015, I started to focus my attention on the InsureTech category. We had made a couple investments sort of before InsureTech was a thing. Yeah. I like to joke, I made my first InsureTech investment in 2011, had my first InsureTech exit in 2015. Right?
It still was barely even a word at that point, if one.
Totally.
Yeah.
So it kind of smelled like something really interesting was about to happen in the category. So I was looking around for, okay, if I'm going to be focusing my attention on this, let me go to the right industry conference where I'll meet the other investors and the startups and the innovation executives within the industry.
Yeah.
And I just couldn't find anything that fit the bill. And then it's like, if you watch the animated movie Robots, like, see a need, fill a need. I needed a conference to go to for my day job, right, to be effective on the venture capital side. So I was like, well, maybe I should just go ahead and try to create it since I need it to exist. I luckily, of course, got connected to Jay Weintraub, who actually knew what he was doing, unlike myself. But really, ITC came into being just because I needed it. And then, I kind of persuaded Jay, build it to what I need. Like not someone like me, but just like actually me, right? Let's do a focus group of one. Whenever there's a design question, a content question, like, Caribou, would you want to go see this? Oh yeah, I'd love to see that. All right, it's in the agenda then. Do you want to see that? Well, it doesn't really fit. So
let me ask you on that, because having talked to Jay, he was thinking about the agent space.
Yeah.
And you had a different vision. And so, the way he tells us, like, in Caribou convinced me, and like, good decision. I know there's also the agent side of, was it Agent Connect or Agents Connect?
Yeah.
But what was like, how did you get through that sort of like two different focuses,
You know,
foci?
Jay has a deep background in like lead gen, customer gen. The
Yeah,
prior conference he founded was LeadsCon, if that gives you a sense. So no surprise, he was very focused on like there's and he knew that there was a real opportunity and need around helping sort of bridge people in the way a conference does on the customer origination distribution side specifically. And when he and I got introduced, he didn't really know like what I was there to talk about, that I had this idea of something I needed for a conference. Um, so uh, quickly he started talking about his idea for, sort of an event focused on the agent in particular in
yeah,
insurance. And I said to him, let me just pause you here for a second, Jay. This is going to either be a really short conversation or a really long conversation. Because if what you want to do is really all about that, that's fine. By the way, I still want to create a conference, and it may be slightly competitive with what you're doing. I hope that this ends up being a long conversation, which of course it has been.
yeah,
And I think really, the contribution I made was helping him see the larger opportunity than what he was first planning to pursue.
yeah,
And the sort of there's a magic. Some events are what we call buyer seller, right? Or vendor and
yeah,
buyer kind of thing. And those are fine. They have an important role, but they're not magical.
yeah,
And I think that the type of event that ends up being magical is where you have something like VCs, startups, and incumbents who all want to talk to each other,
yeah,
right? And it's not that any of them are necessarily trying to sell to each other. They want to understand each other, right?
yeah,
And that's more, where I was thankfully able to shine a light for Jay.
yeah. Well, it was definitely you were living the gap, but the foresight in just how much of an unlock it could be, and it really like ITC became very quickly the thing you had to go to, whether you're doing deals or not wasn't the point. Is you need to be there because that's where the conversations are, the energy. There's, like you say, magic. There's an energy to it. That it's not a trade show.
Right. Yeah. I don't want to talk too much about ITC. I mean, it's a great thing, but there's more. It's a side effect of the industry that's interesting. I will say though, talk about where the conversations are happening.
Yeah,
One of the, if not the most satisfying moments in my career is stepping back at the lunchroom at the first ITC. This is October 2016. I just literally took about 50 paces back in order to take in the whole room of all these people talking to each other,
yeah,
and realizing that like most of these people would not actually be talking to each other if they didn't have this place to be.
yeah,
And then we hear the occasional story about how people met at ITC and it resulted in some deal, right?
yeah,
But it was just like this amazing sort of moment of satisfaction, right?
yeah,
Putting my little dent in the universe there.
yeah. That's great. So something else in that first ITC was you made a number of predictions about the industry, having been in the insurtech space before the term was coined. And you and I can get into a battle of whether insurtech should have an E in the middle or not. I got Cap and Crunch on my side for the shorter spelling. But so other than how to spell things, you had some predictions in there about kind of what was brewing, what was coming for the industry, what we would see on the nearer term horizon, whether it's short term or long term, and what defines those phrases. But the things that are going to be here in the next few years, I wonder if you could go through those and maybe think
Yeah.
about where you were spot on, where maybe there was a pivot, or like it's too soon, or their dynamics are shifting in a different way.
Yeah. As a VC, right, your job is to look around corners, right? It's to try to predict the future. It's I like to say it's being an applied futurist, right?
Yeah,
Whatever the heck being a futurist means. It also means being comfortable with being wrong a bunch of the time. That's part of the calculus. So in that first one, again, that was October 2016. Made a handful of predictions. I think I did okay on my report card. I'll start. I'll sort of do the bookends probably. Like Where I was clearly too optimistic, and and where I continue to be too optimistic, right? It's sort of like the future is a couple years away, and it always will be. Is parametric insurance. I love parametric insurance, the elegance of it, right? In terms
Yeah.
of taking so much of the ops cost out, creating speed for the insured. Um, you know, there's so much elegant that I like there, and efficient. Um, and I was hopeful and predicted that it would start to make real material impact. And while you see little sparks here and there, it has not yet caught on fire. Maybe a little bit in some niche commercial areas, but I was both wrong and disappointed
Yeah.
in how it's played out. And I think I will continue to be both wrong and disappointed in how it plays out, sadly.
Yeah. I think
Uh,
that's fair because that's a space where there's sort of promise for taking a lot of the reasons why people get frustrated with insurance out of the equation. There's just something happened, and through next to no effort or none at all, you're made whole again
yeah,
in terms that you understood before everything went wrong. So there's no discussion, black and white, etc. I think that's a really beautiful concept, and there's lots of complications to it, and there's lots of hope and not necessarily adoption yet. Maybe some of the complications are part of that. I think the regulatory environment still trying to figure out how do you work with these triggers and how is it not gambling. That seems to come up a lot, but I'm with you on that. That
yeah,
a sense of disappointment that this could be. So, but let's not lose hope.
yeah,
There's still
yeah.
time.
I think I probably did well in my prediction of a Cambrian explosion,
Mm,
which just sort of that there would be ongoing wave after wave of new innovators coming into the space. Particularly among entrepreneurs in the venture-backed community,
yep.
although also from within the incumbents. I also think you're seeing an ongoing push, right, to innovate. So I think I can give myself probably an A or even an A plus on that one.
Do you think COVID and the lockdowns and the need for digitization was a big driver of that, or do you think that this was already going on and maybe that
Well,
compressed some of the time
well,
frames?
I'd say certainly in the startup side, it was already
Yeah.
underway. I don't think it really changed that. If anything, there was an 8-week period where it looked like maybe the venture, backing would go onto an ice age and freeze
Right.
up,
Yeah.
and that lasted literally 8 weeks, and then the party was rocking on funding, and actually like venture funding in general, in fintech and insuretech, right? They're all sort of full steam ahead.
Yeah, for sure.
I think that um, I actually, while I do think COVID has accelerated many things, and including specific parts of insurance transformation. Think about claims, right? It's certainly a shot in the arm for, no pun intended, for the the snap sheets of the world, people who
Yep.
are trying to like help with the adjusterless claim
Right. Right.
process. Certainly, I think it's the shift in at least a marginal shift from a distribution perspective away from the brick and mortar agent or broker. That doesn't necessarily mean it's away from the agent or broker, but at least from the
Right. Going to
corner.
the office and
Yeah.
right. Yeah.
um, so I think that it's COVID has affected many things. I think that that Cambrian explosion just sort of continues sort of a pace.
Yeah. Yeah. I agree. So you got that one right. I think
Yeah.
that's with a bullet because that's quite an explosion for sure.
Yeah, I actually looked. I looked back in my presentation from 2 years ago just to see. I wanted to like,
Okay.
5 years. That's forever.
Yeah.
See what I tried to predict 2 years ago, which itself still seems like forever ago, right? I'm feeling pretty good actually about that. As I talked a lot about APIs,
Yep.
and I certainly have been taking up that mantle, and I think the APIification of insurance is clearly happening, right? And it's accelerating, it's moving forward. I think it's more a barrier about how, right, rather than a desire to do so. Actually, before I go on about that, though, one more point about COVID and the sort of Cambrian explosion and all that. I actually think that among the incumbents, that while COVID is some tactical push on particular areas, it's actually I think it dropped InsureTech in importance in the boardroom. So I used to think like, okay, well, 2 years ago, right?
Yeah.
I would have said, I think actually InsureTech is a maybe even top 3 issue in the boardroom, right? For insurance companies and brokers and all that. Like, it's probably not number 1, but it's really important and on their mind. Like, what are we going to do? What's our InsureTech strategy? Do we acquire? Do we build? Is it going to disrupt us? Will it give us an edge? And it's not that its importance in absolute terms has reduced.
Yeah.
But like, if I'm in the boardroom of an insurance company, right, 2 new questions have just moved way up the leaderboard, right? How do we deal with COVID today? And how do we deal with COVID tomorrow?
Yeah.
Like, do we have people in the office today, right? Do we shut down, right, our satellite offices? Like, what does that look like? How do we deal with business interruption insurance if that's one of our products? Like, just the mass of sort of the urgent questions around COVID, right, have displaced lots of other questions, including like the long-term crucial question, like, okay, how do we play in InsureTech?
Yeah. Okay. No, that's the relative importance, and maybe InsureTech is an enabler for some of the decisions that come out.
Totally. It's just not like at the board level,
it's not its own
we
issue.
Gotta have it.
Yeah.
Like, don't talk, it's like I've written about sort of like a how to run a boardroom, right, for entrepreneurs and stuff.
Yeah.
And like, it's a lot like the Maslow's hierarchy, right? Like, don't talk to me about like strategy or even like HR until you reassure me that we're not going belly up next month.
Yeah, fair point.
I got to know that I got food and air and water first before you talk about these other things.
Yeah.
And so InsureTech is kind of high in the Maslow's hierarchy, right? Important, crucial, long term, but I need the food and air of, okay, where are my people going to sit? Do I even want them in the office?
Yeah. No, that's a good point. I get that. So explosion of activity, the API-ification, parametric, what are some of the other ones?
Yeah. So, I've also been really enthusiastic about embedded insurance.
Yeah.
Right. And the shift from, what I said, B2B2C to B2B2C, but the difference is it's going from a broker to a business in that middle B there. Right? Which sort of starts to unlock things like the neobanks and other channel partners, right? Yeah. Becoming a new type of distribution, right? Replacing I'm not as much of a, despite being a guy who sent out direct mail by the truckload, I'm not a, direct to consumer is going to completely swamp the agent, but like, you have the sort of different type of middleman in there, right? Can actually be an interesting impact. And I think that's playing out. I mean, actually, 2 years ago, a year and a half ago, I presented about invisible insurance. Like, I had a slide.
I was going to ask you about insurance. This. Yeah.
What's that?
I was going to ask you about invisible insurance.
Yeah. So I look back at my presentation from 2019. It had this extending the notion of embedded insurance all the way to invisible. And I will admit, I didn't entirely know what I meant by that.
Okay.
like, I think it's an interesting idea. I think it's just something, but I hope no one really asks me about it, because I don't know what I mean. And thankfully, like, well, sometimes you do need to trust your gut, right? That there's something there, even if you can't provide the rational component to it yet. Mm-hmm. Sometimes the rational part of your brain needs to catch up to the instinctive piece. So thankfully, I think the rational part eventually caught up for me to my instincts. So I've now got a framework which actually puts invisible insurance in some context.
Okay.
Like embedded even is a little bit more subtle. Like there's the notion of a soft embed, right, which is tied to making it an opt-in, right? So you're, in the checkout line at Best Buy, would you like this warranty on your new TV? Right? That's an opt-in.
Yeah.
It's a soft embedding, very powerful. It's very efficient for distribution. What it's not good at actually is if you are subject to very, very bad adverse selection, then even a sort of soft embedding opt-in is really vulnerable. Right? May not work well.
So is
Hard embedding
is that something like the opt-in? I feel like I might be cutting off your next example, but like travel insurance, is that in the same level as the warranty, or is that
that's right.
okay.
So product warranty at Best Buy or Amazon, travel insurance, actually tuition insurance, right? A relatively novel product from a few
I've
years
not heard
ago.
of this yet.
Well, you must not have any kids in college yet, then.
Not yet. So that's why I'm like, ooh, pay attention.
Yeah. So you go to UVA to pay your tuition bill and the bursars, page, and in Flow, they offer tuition insurance where if your child has to dematriculate, right, during the year, they will sort of refund the pro rata unused portion of your tuition, right? And it's an opt-in, right? It's softly embedded, right, in the experience. Now that's in contrast to hard embedding, where it's an opt-out.
Okay.
And that's a lot more unusual, right, for that kind, because it is a sort of stronger push, stronger nudge, of course. But it's really important where the product is subject to adverse selection, right? I'm an old risk guy, and like so probably the best example is in the sort of renter's insurance that replaces the security deposit.
Yeah.
Right.
Yeah, like Rhino and others.
Yeah, like Rhino and LeaseLock. Like if there's a security deposit and I can get out of the security deposit by paying $25 a month and it's an opt-in, right, and only 10% of people are taking it, 15%, that's a recipe for adverse selection, right? On the other hand, if it's an opt-out, right, so if it's the default approach and you're getting 90% of people taking it, right, it's okay if the best risks are the 10% that opt out, because you still got 90% risk pool there, and that's okay.
Yeah.
Right. So there are some cases where actually the hard embedding that's connected to an opt out is the only way to go. So the only solution that makes the product work because of the risk dynamics. And then that takes us to invisible, right? Where if I tie this nomenclature to like, you can't even opt out.
Yeah.
It's neither opt-in nor opt-out. It's just there, right? Invisibly built in, invisibly embedded. And you think, well, surely that must be rare. Like that's a really strong. And I think it's actually very common. The issue is it's invisible, so we're not used to seeing it.
Right.
So when you buy a new car at the Ford dealership, you can't say, well, I know that the warranty, right, is part of what I'm paying for. In fact, Ford actually has to take reserves for it in advance. So there's actually a price to it. You can't say, if you take $300 off the cost of this car, right, I will sign a complete waiver and never do a warranty claim in the next 3 years.
Right.
No, you can't opt out.
Yeah.
When you go to the doctor, right, you can't sign a waiver that says, I will not sue you for malpractice, right? Reducing therefore your malpractice insurance, right, expected cost for this visit. No, right? You just can't opt out. And so it's actually, once it gets to that point, it is invisible. It's not even necessarily drawn out as a separate line item, but it's there and it's
baked into the economics.
Yeah. So
I think it's the oldest form of embedding. If you think about it, I mean, the things that you talked about, these have been around for a long time. Or you go to an amusement park, it's baked into the ticket price what their liability exposure is, that in effect, yes, it protects them, but it's protecting you should something happen and you sue or you need some sort of financial or medical assistance. That's what steps in to pay. So it's part of that cost. Skiing lift tickets. I was an instructor for years, and like that's the whole waiver on the back and the fine print on every ticket you buy. That's
Well,
basically setting up.
it's funny you should use that as an example. So I'm involved in a company locally here in Richmond called Buddy Insurance, which is an embedded play,
Yeah,
and they're specifically providing that kind of sort of supplemental accident disability insurance, and actually, some. I guess technically it's P&C insurance too, over like your skis or your mountain bike, right? Things like that, your equipment,
yeah,
all in conjunction. And lots of interesting things about the how it gets embedded,
yeah,
and working with the ski resorts or the mountain bike race organizers, all that.
yeah. You rent skis. There's a level of liability
Yeah,
understanding in there, whether it's priced out or it's laying it explicitly on you. That may not be a cost that you're paying in the moment, but you're going to get hit with it should something happen to the equipment. What if you could insure that away? I mean, we see that in
right.
rental cars where it's more explicit and you have the
Sure.
option to insure it away. But so then it becomes a soft embedding. But yeah, it's interesting. Like when you first started, I was like, oh, that's the future. And I was like, actually, no, this is really the first form of embedding. We just had no clue because it's invisible, not
Right.
even aware of it.
That's right.
And then I
Yeah.
thought about how do I negotiate better for my next car, but that's a different story. So that's interesting.
Yeah.
Um,
So I feel pretty good about calling for invisible insurance, even if
yeah,
I didn't know what I was actually talking about at the time. And then the
edit that
last
part
one
out.
is sort of the Oprah, you get a carrier, you get a carrier, you get a carrier, like the shift from MGA to full stack,
Yeah,
right? Um, and I credit Adrian Jones, previously at Score, now at Hudson Structured, with shaping a bunch of my thinking there. But the MGA is proven to be a really good structure for an early stage startup that has limited expensive capital
yeah,
to prove out product market fit.
yeah,
But it's also become actually the exception to the rule in terms of being the long term uh, steady state structure
yeah,
for for an insurtech. That once it starts to get that product market fit, there becomes some pretty strong both economic and non-economic forces to support actually shifting to becoming a carrier or equivalent.
yeah. So in the work on my next book, I talked to David and Tony, the founders of InsureTech New York,
Hmm.
and they looked at the unicorns. Now, granted, this is like sometime in the second half of 2020, and so the list they had of all the unicorns in insurance now is like within months the list was doubled. But so it's a smaller population than we live with today. Um, there were something like I think 8 of them at the time. 6 were PNC, none in life, interestingly, and only one or two were 2 were B2B. The rest were all B2C. Of all of those, only one that's actually providing insurance of some kind. Only one is still an MGA.
Right.
And I won't get into who's which ones and all that, but that one bought a carrier. So
Right.
the idea, and they're going through some other transactions right now. So I'd imagine that when that's all settled, they will start writing on their own paper. I can't imagine that they wouldn't. They have all the pieces in place. But yeah, I mean that's the story. But they were all MGAs at one point, so
Right.
that's that progression.
Yeah.
So
Yeah.
it is interesting.
Yeah. Well, because you need the product and underwriting flexibility
Yeah,
of being an MGA versus just taking completely off the shelf products as an agent. I
yeah,
mean, uh, when I talk to early entrepreneurs, right, I'll go through the whole like set of trade offs. Like as an agent, you don't get paid that much of the premium. But you get paid something.
yeah,
But you're not asked to do that much work necessarily. So it's sort of fair, right?
yeah,
As a carrier, you have to do everything. You're ultimately on the hook for doing everything, but at least you get the whole premium to work with, right,
yeah,
as your economics.
yeah,
I think if you're an MGA, the sort of joke about it, like you're asked to do almost as much as a carrier, but you're only getting paid a little bit more than just a pure agent.
yeah,
So it's kind of the worst of both worlds in terms of long-term economics.
yeah,
And so it's the sort of unstable. It's I've got an old physics background. It's like an unstable state for an electron, right? It's just
sure.
it's either got to drop down or go up to the next shell, but it's like not that one spot.
Yeah, but it's a good. It's like a lab analogy, right? You get to play around with the concept,
Totally.
and that's not commercial. It's not viable long term in that kind of environment because of those economics relative to the effort you still have to put in. But you can prove it out before you actually risk, large sums of statutory capital. And frankly, to get there as a startup, you'd have to sell off unbelievable amounts of your company if that was even enough to raise that kind of capital, just to park and do nothing with, so that you had the right ratios for the regulators to let you start writing.
Yeah.
So it's starting as a carrier, talking to a bunch of startups and writing the book, that this keeps coming up, is like, should we have started that way? Well, we could have, but I think the capital piece becomes too restrictive that early on, before you know that there's a story there. So the multiples you're going to get in raising capital to just park, it's just no. I don't think it's viable. But
And there's a lot to be said, especially at that early stage, for finding the right carrier partner who, so, if do you want to be monogamous or polygamous, right?
yeah,
And early on, right, actually, again, because resources are so limited, if you can find the right carrier partner, right, actually being very monogamous with them, right, in order to get the launch off the ground, in order to sort of create the shared learning on both sides, can be really powerful. And sometimes that comes with having them get a stake on the equity side as well. Think about Pi Insurance, as one example there. I've run across another one just recently on more of the life insurance side, where I see that kind of relationship being formed. But if you can, you know, adopt that, find the right partner, and then create the monogamy at least
yeah,
for a while,
yeah,
as long as it's in everyone's economic interest and strategic interest.
yeah. So that is one of the three main takeaways in the book, is around the capital and that point exactly. And luckily, I have examples where it went well and ones where it didn't. You need to see both to
Right.
to feel how that goes. But I think it is, monogamy it's not just about only having one. It's about how committed you are to each other, and how open and how strategically aligned. That comes out a lot, is are you really sharing everything? If you have plans to go full stack, do they know that? And you're not just taking it for granted that they know, but you've actually talked through that. Because there will come that moment where you go to flip the switch and you still need them to support your existing book,
Hmm.
or you stop existing in an instant if they shut off all your capacity. So you really do need alignment, and investment's an interesting way to achieve that. And you do see several of them. You
Right.
mentioned Adrian, Score and Branch had a really strong relationship from a capacity standpoint, but also investment. Markel and Thimble, same kind of story. That you see that Next went through the same thing with Munich, and with Markel also. Like, the story keeps coming up. When there's that alignment, you can do very different things, and when there isn't, it can risk the whole company.
That's right. That's right. And it's not just the economics, it's also the infrastructure.
Yeah.
Like, startups thrive on their nimbleness and their speed. And if they're tied into a partner that is, slower than is absolutely necessary,
Yeah.
and there is some slowness that is absolutely necessary, right? There's appropriate regulatory hurdles and
Yeah.
prudence and things like that. But if they're slower than is fundamentally required, well, that you know really kneecaps the startup from the
Yeah.
beginning, and they become the worst of all worlds rather than the best of all worlds.
Yeah. Um, Caribou, I know it's not October, so it's not time for you to make predictions per se, but is there anything in the last few minutes that you see sort of brewing on the horizon that is interesting to you? We didn't talk about the geographic expansion prediction that you had made, but that's one that is still to play out. Lemonade's done some expansion, but beyond your home border, country wise, we haven't seen a lot of that. Is that something you think is going to happen, or have you changed your view on that? Are there other things
I
brewing?
think it will happen. It is a probably slower than I first thought or hoped. It's a maturity question,
Mm,
probably. But I think the good news is it's also for many of the insure techs, it's just not a necessary in order for them to grow, right?
yeah,
So if you look at homeowners insurance, and there are some homeowner startups where they're not in 50 states yet, right? And moving to state number 12 may actually still be the more efficient way to expand and grow
Yeah.
than moving to country number 2 or 3.
Right.
Now that's not always going to be the case, but certainly for some.
Yeah. And you and I talked about Kin. They quadrupled their book in 12 months in 3 states.
That's right.
It doesn't.
That's
You
right.
don't have to be everywhere. I mean, they're in 3 states that have, expensive homeowners premiums. So every policy adds a lot.
Well, and that takes, there's the notion of being a generalist versus a specialist, of being horizontal versus being vertical, right?
Yep.
And it's hard to say a priori that there's just one right answer on those kinds of things, right? Do you swing for getting 1% market share in every state?
Yeah.
Or are you actually saying, I'm going to be a specialist, I'm going to be incredibly good at a particular kind of risk and distribution, and I'm actually aiming for 12% distribution, 12% market share in 3 states, right? Well, you know what? I'm not sure which is necessarily the better business, right? Both have their pluses and minuses. Both are really interesting strategies, and it's a choice. Right.
Yeah.
So I think one of the quasi predictions is that you're going to start seeing this mix out there between your generalists or your horizontalists and your specialists or your verticalists, right?
Mm-hmm.
And that specialization could be on a geographic basis. It could be for particular type of risks. It could be, I think you could start to see, if there's a whole nother wave of startups. I feel like we are almost at the end of the first wave, right?
Yeah.
And you've got these, unicorn winners romping around, continuing to grow, right? And now you've got this next generation of entrepreneurs looking to see, okay, where's the soft part of their flank, right?
Yeah.
And what's the space that they're still not after, and that the incumbents maybe are ignoring as well, or not serving as well as possible. Yeah. I mean, I just ran across a company recently called Foresight that's going after the mid-market now of commercial insurance.
Yeah, where everyone else is talking about small. So
right,
where's mid-market? Yeah.
So it's like, okay, this is healthy. This is great, right? All of the new competition, right? Who benefits from that? Regardless of which particular, startups succeed or fail, right? It's the customers who are going to succeed, and long term, the industry health is going to succeed from that.
Yeah.
So I think that's one trend to sort of be watching. I think the low code, no code movement, right, is certainly interesting, and I'm seeing that in more and more pitch decks. I'm seeing that in terms of actually, it's really, I think there is some big section of the Venn diagram overlapping between like no code and embedded, because you're starting to see these companies that not only are they, a solution for embedding insurance into, a third party, but then they provide the no code tools for that embedding to actually happen, for the new product that, third party X wants to have in there. Right, configuring it and setting up is just a no code, drag and drop, rather than some sort of real sort of hardcore software construction of it. So I think there's a natural synergy between this sort of emergence of no code and the embedding efforts. I think that one of the trends I've been believing in, and I feel pretty good about still, and if anything, it's likely to accelerate, is sort of the rise of the successful fintechs into, or at least as a partner channel, if not sort of more than that, for insurance. I mean, Nubank, which is, undoubtedly the most interesting, most successful neobank anywhere in the world, maybe outside China. And I only say that because I don't know China well enough.
Yeah.
like Nubank based in Brazil, Pan Latam now. They recently launched a life insurance product, working with Chubb actually, which is an incumbent, but it's a really innovative incumbent.
Yeah. Yeah.
And they sold something like 100,000 life insurance policies in 2 months.
Wow.
Right.
So are they a broker or agent there, or are they an MGA? How are they or
I'm not
just a
sure. I
distribution
think that
partner?
they're a broker in the
Yeah.
short term. Maybe even just sort of revenue share,
Yeah.
customer gen. But with a company like Nubank that is fundamentally technology first, who knows where they go with it.
Yeah. They have
But just the
flexibility.
fact that they are able to work with with an insurance provider and move a lot of product like that, right?
Yeah.
Sort of right just out of the gate as their first experiment.
Yeah, it's a good thing.
Yeah, like sort of it says that there's something long term to be done there. Right now that Credit Karma is part of Intuit.
Yeah.
Like, I mean, I for a variety of reasons, I watched the Intuit earnings call and transcript, and they are now regularly referencing insurance products as part of the suite that they want to be providing to their customers, whether consumer through Credit Karma or small business, and think QuickBooks, as part of how to make their customers' financial lives better.
Yeah.
And they should, right? It makes sense.
Yeah.
But you've now got these set of really at scale fintechs that are beginning to eye insurance, and I think that's a big deal, especially on the distribution side.
Yeah. SoFi has been active in having a marketplace for insurance, but is that, they just bought a bank. Is that the end of it for them, or do they have different plans down the road? Who knows?
Yeah, I don't think that's the end of it.
Yeah,
I have no reason to
not. Yeah.
Well, and I mean, especially if you're if you're one of these big winning fintechs, just from a cyclicality, right, and making your business resilient.
Yeah.
If you can weave some insurance revenue into your business, that's actually very healthy for you.
Yeah. Two that I had called out just in sort of my predictions at the end of the second book is Brex and Carta. And it might be my specialty lines side coming out, but the two of them, Brex sort of maybe similar to Intuit's story that for so many startups, they see a lot of the financial transactions, and does that position them differently to understand your exposures and your needs and your cash flow, et cetera, et cetera. And for Carta, it's like, if that doesn't put them in a great position to get you D&O coverage, like they know everyone who owns shares. So that's a huge potential claimant population. They know what the transactions are. They know the financial health. They know the filings and all those things that feels like, maybe if there's someone from Carta listening, there's an idea that it feels like they'd be well positioned. Again, that's fintech, that's not insuretech, but are they in an interesting spot to do something?
Well, so that's my last sort of prediction or trend I'm seeing is there's also the shift. I saw it B to B to C, middle B is the broker. There's also the shift B to E to C, right? Where the middle E is the employer.
Okay.
Now, I'm not saying that I'm going to buy my homeowner's insurance through my employer, right?
Yeah.
At least not until tax policy puts it on par with some other forms of insurance.
Yeah.
But the employer is becoming a more and more prominent channel for distribution, certainly for fintech. And I think that we're going to start, and historically for some very specific parts of insurance, of course, right? Health, group life, I think you're going to see more and more of that. Now, I'm in a little bit of hammer in search of a nail. The VC fund that I'm part of now is very employer focused as it's part of its thesis. But I'm seeing enough there. And you talk about Carta, right? And there's other companies like Origin that help employees understand their private stock and things like that. Well, once I start to understand my financial picture provided by my employer, well, maybe you need some certain types of insurance that dovetail with it. And because we already know what your other financial instruments are, we can make a better recommendation for you.
Yeah.
Right? You start to tie in so much of what matters there to the employee's overall financial picture.
Yeah. Yeah.
Again, whether it's sort of Carta or you know
Trinet level. I mean,
Origin or
there's
right.
so
I mean,
many
there's a
going
sort
on.
of
Yeah. There's
you know
uh,
there's you start to like I've started to actually ask the serious, semi-serious question, like what would group homeowners insurance look like?
uh,
Like because we don't flinch at group life insurance,
yeah.
right? Which covers smokers and non-smokers. It covers people who are age 60 and age 30, right?
Right. With
Very
no
different
medical
risks.
exams. Yeah.
Yeah, and so like why is it that we never talk about group homeowners insurance?
Yeah.
Right. Like, and I think there's some tax aspects to it, but back to being a risk guy. I mean, actually, the reason you do a group insurance product, first and foremost, is that it manages adverse selection issues. Right?
Mhm.
If I can really provide it as a group, I can drop the pricing of it dramatically to that group because now I've all but eliminated adverse selection. Well, maybe there's something to that for getting my personal homeowners or auto or even umbrella insurance
Yeah.
as a group policy rather than an individual policy, just like we do with life insurance. What
That's
would that look
interesting.
like?
Yeah.
Who knows? I'm probably going off the deep end on that, but it's at least like I try to be provocative.
Or it could be like invisible insurance where we've already been doing it and we just didn't know. And then all of a sudden it's a thing and you called it.
That's right.
So we'll have to see. You got my wheels turning. So that's interesting.
That's my job, right?
Yeah,
I
yeah.
have no good answers. I'm not that smart, but I've got a couple good questions.
Well, I think you're pretty smart, but thank you for that. I hope you've turned a few wheels of people listening and watching as well. So Caribou, thank you so much for coming on a second time for the first episode. It's great. It's great to talk to you.
That's my pleasure. Thanks so much.
Huge thank you to Caribou for joining me for the first episode of the show. And absolutely, wheels are turning right now for me. I hope they are for you, because that is the point of this show. The show is all about getting the industry to think about what's going on, how we can change, to find some inspiration, some guidance, some ideas for what you can do to contribute to making things better. It's just like that message that Caribou shared towards the end about, if we get more InsureTech activity, we get more new things coming in from all these different providers, fintech or otherwise, it might help a particular consumer in a given moment. But overall, it's helping the industry, because the more ideas, challenges, new ways of doing things, support that we have coming in, the stronger the industry becomes in the long run. That's what your hand in all of this can be. You can help move the industry forward. So take some of his words, all of his words, and take some inspiration. Think about your context and what you can start to do to move forward. And he had some great themes and ideas that he talked about where maybe some of the change will be coming from. What are your thoughts on that? And, looking back from that first ITC, the predictions he made, he got 3 out of 5 of those right, which is, I think, a really good grade by any standard. That's a great batting average, is batting over 500. But for the 2 he didn't, it is interesting when you stop and look at why. It's not necessarily that the idea is wrong. It's not ready yet. So maybe that's a technology issue, which I think for parametric, it's not really about the technology. The technology's there by and large. Maybe for some kinds of parametric issues, the way to measure that the trigger was reached may still be, years to come, but for many it's there. But maybe the market's not ready, or maybe the regulators aren't ready yet, and that's okay. But if we look at like music subscription, it wasn't that long ago that Microsoft was shuttering their whole Zune business because nobody wanted to subscribe to music. And Rhapsody was a music subscription business that also wound down. Yet today, Spotify and Apple Music, that's how people tend to consume music. It's actually pretty hard to just buy digital songs the way we were doing 4 or 5 years ago. Really interesting, right? The market shifted. So some of those products that would look totally normal today, yet are not around anymore, is just because we weren't quite ready for what they are. I think parametric might be in that camp. We'll have to see. That's one I do hope that Caribou ends up being right on, hopefully sooner than later, because I think it can bring a lot of help to people, in situations where they're struggling and just need to be taken care of and need that fast. So we'll watch that one. But this group thing, that's got to get wheels turning. And I know there are people out there who are like, that's interesting. Maybe there's something we can do. So work on these ideas. This is how we keep moving the industry forward. And speaking of which, Caribou was so generous with his time, not just for this episode, which yes, we had to record twice because something happened to the video. But the first time I put out a book about insurance, The Future of Insurance, Volume 1, Caribou didn't know me, but was willing to spend some time with me and put together some thoughts that made up the forward of the book. And I think that was not just a great way to set the tone for the lessons, the case studies, the insights to come, but it really helped the book become what it ended up being. It created an attention for the book because he did such a great job on that. So I'm so thankful to what he did to help with that. Now, you can get that book at amazon.com or .de or UK or any of the other Amazons anywhere in print, Kindle, and Audible. You can also get it at future-of-insurance.com. But in this first episode of the Future of Insurance podcast, I also want to announce officially that the second book in the series is coming out this summer. The Future of Insurance from Disruption to Evolution, Volume 2, The Startups, will be released at the Future of Insurance conference put on by Reuters Events. Great name for a conference, and to release a book called The Future of Insurance, right? I have the honor of actually chairing that event. So I'm very excited to be a big part of the event and to release my book there. It's running June 22nd to 24th, 2021, virtually. You can register. It's free and easy. And I've made an easy link for it. If you just go to future-of-insurance.com/FOI-USA for Future of Insurance USA, it'll take you right through to the Reuters registration page. Very easy to get to. That's where the book will officially be released. But today, when this podcast comes out, I am officially putting up the pre-orders for the new book. I even here, for anyone listening, you can't get it, but this is the artwork for the new cover. And as part of that, I'm re-releasing the first book with brand new artwork as well. It's much more exciting and gripping, and I'll put photos of both on screen so people watching can see that. But I'm very excited about this. This project, the Future of Insurance book series, has been a huge part of my life the past couple of years. Very excited by the impact it's had, a lot of conversations it sparked. I hear from so many InsureTech founders on a regular basis as part of my advisory work, and they're talking about the book and they're like, this helped me understand the space better. This helped me formulate more of my idea for how it can work or how it can apply. Or, when we have new hires join who don't have an insurance background, we always have them read your book because it gets them into what insurance is all about, what the issues are, how it's changing, what customers care about, et cetera. Well, the first book was all legacy carriers, incumbents, really important, right? So they have all of these constraints. They have this pressure from the startups pushing them to do differently. And that's before the pandemic. And then here's case studies from 7 carriers who did something different despite all that. This book, Volume 2, The Startups, is the other side of that equation. It's the startups who maybe are creating some of that pressure, that disruption, or the ones who are pushing ahead on some new ways of looking at things. Caribou talked about embedded. That's a very active conversation point in especially one of the cases on ClearCover. That's their business model, is embedded. So we need to look at examples, not just on the incumbent side, but also on the startup side to understand how can we change? What can we do differently? And I'm very excited to have 9 different companies, 8 startups, and then 1 startup born within an incumbent carrier to help us see what's the genesis of one of these kinds of ideas and how does the journey play out, the ups and the downs, the struggles, the difficulties, the high points, the lessons that we can take forward into our context, whether we're starting something up or we're in something existing, whether we're in a carrier, a distribution partner like an agent or broker, or someone else in the insurance ecosystem, a TPA, a software company, a body shop, an adjuster. It really doesn't matter if you're in this space. These are the stories that we need to dig into to understand what's going on and what we can do about it. So the future of insurance, from disruption to evolution, volume 2, the startups, is available for pre-order now on Kindle from Amazon. Or if you want to get the paperback, you can pre-order it from me directly. Amazon doesn't allow pre-orders of paperbacks or hardcover for that matter, from their publisher at least. So I've made the arrangements to directly sell those to you, and I will fulfill them and make sure you get that copy, and I will even sign it for you as an added bonus and send it out to you directly. So you can go to future-of-insurance.com and get more info on the first book. You can get a copy. I link out to all the ways you can do that, or you can pre-order the new book, volume 2, the startups. So get more info, pre-order or order the existing one, and get to getting some of this insight, this push, these lessons into your world so you can help the industry move forward. That book is coming out, volume 2 is coming out this summer, June 22nd to 24th at the Future of Insurance event from Reuters Events. And I will hopefully see you there. I'm very excited to be chairing that. We have an incredible lineup of literally industry legends, just like last year's event. So it's going to be a great one. I want to say 2 things before we close. 3 things, actually. First, if you haven't subscribed to this new show, which maybe you haven't because it's new, subscribe. Just hit that subscribe button in whatever platform you're listening to this on. If you're in YouTube watching this, you can subscribe and hit the bell for notifications, because I am going to keep bringing out episodes of inspirational, insightful leaders from across the industry to help us all move forward. So I don't want you missing an episode, and make sure you tell someone else about it. You can send them to Future of Insurance, future-of-insurance.com, where they can click on podcasts and get the info there, or just send them a link to the show, because we need this to spread throughout the industry to keep us moving forward. So that's the first of 3 things. The second, a huge thank you to Medallia. Medallia sponsored this episode. They've actually agreed to sponsor the whole first season, so I can just focus on bringing these great interviews from thought leaders and executives in the industry, from startups and incumbents and all over the place to you. So very big thank you to Medallia for their support making this happen. And lastly, if you liked the music that was playing during the opening or right now, it's from an artist called Upbeat Music, and you can listen on Spotify or Apple Music, Amazon Music, wherever you like to get your music from. I know we just talked about all these subscription music services. You can subscribe. You can even buy, yes, you can buy the tracks directly. Just search for Upbeat Music on any of those platforms, and I will link to Spotify and Apple Music in the show notes, so you can get to it easily there if that interests you. Thank you to Upbeat Music for providing the music for the show. And with that, thank you, everybody. Thank you to Caribou. And I will be back in the next episode with another inspiring, insightful, thought-provoking, wheels-turning kind of conversation for all of you and for the industry. Thank you.